without further ado, I would like to invite up Stefan Heitmann. He is the founder and CEO of MoneyPark. I'm sure you've already heard of it, but if not, Stefan, leave it to you.
Thank you. Hi, everybody else from my side. It's been a great pleasure to be invited here on stage to share a few thoughts that I had and have from my personal MoneyPark story. And should this come up now, I will be getting started right away. While you guys are setting it up, I'd like to discuss with you as much as you would like to. So if you feel like interrupting myself, or hopefully save some minutes at the end to answer any questions you might have. I would really just like to take this as an opportunity to share some of my thoughts and experiences. Good, thank you very much. So before, I know it's after lunch, so in case anybody dozes off, my main message right away, if you believe in your idea, get started. That's basically my key message to you today. I'll not leave it at that superficial and simple level. I'll try to go a little bit deeper, why and how I feel about starting a company. I'll do so first sharing with you just very basic ideas about what we're actually doing, not only to present MoneyPark as a business that's less of an interest today, even though I think you should keep it in mind as the best place to get a mortgage in this country, but it's more about why, how, and what did I take away from MoneyPark so far, and try to make things better, try to learn a few of my personal lessons, but also ideally share some of the thoughts with you. So to get us started, what is MoneyPark? Very simply put, MoneyPark is a mortgage supermarket that is based on 3 customer promises. These customer promises are very simply put those 3 choice, best rates, convenience. Those are the 3 USPs, the 3 promises we make to our customers, and this is what we stand for. Why do I compare it to a supermarket? Because a mortgage is a very simple, very commoditized product that is basically distinguishes from one provider to another by its interest rate. So you get money, you pay for it. It simply is that. What is different about MoneyPark versus any bank where you can get a mortgage? First and foremost, you get mortgages in our place from at the moment 94 providers and not just one single provider if you walk into a bank. What else is different? It's different because we aspire to offer you the best rates in the market simply by comparing the entire landscape out there, by negotiating on your behalf, but also on behalf of everybody else, and thereby use a scale advantage in order to get you to better rates. And last but not least, this convenience element. We are not just comparing rates and then sending you off to the bank to have your mortgage financing talk. We're actually allowing you to close everything in one in our shop, so you never have to actually go into a bank again. All you do is you take the product out of the shelf, you look at it with your advisor, you compare it with others, you put it back if you don't like it. If you do like it, you take it to the cashier and you're done. So it's a one-stop shop for mortgages. Why do I explain that? Not only to familiarize you a little bit with what I'm doing for most part of my time, but also to tell you one thing that's very important to me, especially to those of you who are in the process of founding a business or who are beginning to start one. It's about the USP part of it. I spend a little bit of time on these USPs because I need these USPs all the time. I started MoneyPark 5 years ago, and still to this very day, I walk into bank meetings and I have to explain it all over again. I walk into investor meetings and I have to always explain what I'm actually doing differently. Probably most importantly, I need to remind not only myself but also my team all the time, why are we in the market? Why do we deserve to be in the market? What is in it for you as an employee, and why do we need these USPs to give us focus and direction? So that's why I place so much value on those points, because I have personally seen loads of startups who I think were a little too unclear about what is actually their value add to the market, and eventually it comes back and hurts you. So that's why, to all of you entrepreneurs, just be very clear in what you're actually wanting to do and make sure that you have a story. So that's one of the key messages and lessons learned for myself, which I need every single day. Let's take it a step forward, or actually put things a little bit into perspective. I tell you a little bit about the market that I'm in, again also in reference to hopefully your entrepreneurial stories. So let's look at the Swiss mortgage market. And very simply put, it looks like a big monster. So the Swiss mortgage market is one of the top 5 in the world. We have over 1,000 billion mortgages on Swiss balance sheets of banks and insurance companies. It is one of the top 5 mortgage markets in the world, which always shocks investors, especially those coming from out of country, looking at 8.5 million people and thinking they're wasting their time in this country. This is maybe true from a pure population size perspective, but often enough there are market niches, market pockets in this country that are much, much larger than what initially meets your eye. And the mortgage market is one of those markets. Why is that? Real estate prices are sky high. Our average transaction is 3.5 times the average transaction of our role model peer company, if you want to put it this way, in Germany or France. So just to give you some numbers, our average transaction is 700,000 Swiss francs. The average transaction in Germany is 200,000 euros and even a little lower in France. So it just gives you an idea of how big this market can be. This is the annual turnover of the market. The market churns at this rate, about 120 to 140 billion a year. So this is up for grab every single year. And we are fighting to get a share of this. It's growing, one of the few markets in financial services that are still growing healthily and heavily. Why is that? Switzerland has one of the lowest home ownership rates of any developed country, and hence, also being driven by the wish and dream to be in your own home. We have a market segment that is actually seeing some very healthy growth rates. Looks good, all great, all perfect. If not, it were for one simple and very, very challenging aspect of the Swiss mortgage market. And it's actually, I'm always in the way. I'm going to be moving over here. It's because of this. As in so many other cases in Switzerland, the market is nicely and tightly controlled by very few market incumbents. That's, to me, a very Swiss phenomenon. You have in almost every single industry, you have 1, 2, maybe 3 market leaders catching the market, taking it all, and leaving basically nothing for most other people. So in our case, the 4 big banking groups control 85% of the Swiss mortgage market. 85% is a huge number. They live very happily, very healthily on margins in mortgages that are extremely high from a banking perspective. So they have zero incentive to see any change in this market. They have zero incentive to let new players into this market, and therefore they defend it at all costs. So this is not atypical for many of us starting a new company. There is already somebody grabbing that market, defending it, trying to defend you from getting into it. So you can look at many others. You can look at the Swiss grocery markets. You have Migros and Coop, and they do everything in the world to keep Aldi and Lidl out. You can take any, the Swisscom friends are trying everything they could in order to prevent the other telecom providers from coming in. So you always have this. Is this a pity? Is this a challenge? Well, it's for sure something we have to deal with. And when you actually start your business, you have to obviously have a pretty good idea how you actually want to get into it and what you can do, even as a tiny little startup that we were and still are to some extent in breaking into this market. Let's share with you a little bit of my personal story. Why did I start MoneyPark 5 years ago? I was actually not too badly off. I was a partner at McKinsey. Many of you know that McKinsey does one thing really well that pays incredibly well. So I was in a pretty comfortable position and could have done this for many more years. Still, I was frustrated by the McKinsey, not the McKinsey firm or experience. I loved the job to a certain degree. But I was frustrated by getting paid a shitload of money for taking no responsibility. And this is something consultants do, and this is not something many other people probably feel about, but I just wanted to get out there to prove myself in a completely different way, at a totally different dimension. I had no idea whether it would actually work or not. I fundamentally believed it would, and I convinced, hopefully, a good amount of people to do so, but I had just as many people telling me I'm completely nuts. There is no way UBS, Credit Suisse, Raiffeisen, Zurich Cantonal Bank will make way for a new player in the Swiss mortgage market. So this was a little bit of the frustration element. Also, the frustration element came from looking at what other banks are currently doing. No offense to my friends at UBS. I have loads of friends at UBS. Fantastic company, even though it was saved by us. But they do one thing which I think is extremely peculiar. They don't publish interest rates. I mean, imagine that. You have a yogurt to sell in a supermarket. You ask the customer to take it off the shelf and pay for it without knowing what he pays for it. You can do that if you are such a heavyweight in the market, operating at the ultra highest margin point you can. Maybe you can do it because your business is all stock. It's customers you already have won. And that's the easiest business for banks, and that's our chance as fintech startups to try to get the stock business in motion. And for UBS, it worked great. You don't even have to tell your customers what they pay for it. They do your business with you anyways. I would love to be in such a position. It's Monopoly 101. It's perfect as an economic perspective. It doesn't add to transparency. It doesn't add to fairness. It doesn't add to information balances between customers and providers. But so what? If it works, it works. So absolutely no harm or no offense. But it frustrates me to see that the customer is left alone in this market, trying to get information that the large ones are trying to keep away from him. And that's very typical banking. That's also, to a certain degree, very typical for insurance products. These are products that customers simply have no emotional connection with. There's no natural eagerness to find out more about these products. It's different if you sell a car. People are passionate about it. They like to know more about it. They compare it on their own behalf on weekends in their spare time. Mortgages, it's a must-have product you don't care about. You care about the home, but not about the way to get into that home. So what else was important for me? If you, obviously I don't need to tell you that, I mean, if you need to start something and you do it from ground zero with 0 customers and 0 investors initially, it takes a lot of hard work. This was fine by me. I took it because I was kind of used to it. The McKinsey experience teaches you a lot of things. Hard work is one of them. So that was absolutely fine. And I told my wife to kiss time bye-bye for a certain period of time and then see how things unfold. We then I looked at other companies that I could actually get something from. And this to me is a source of inspiration. And this is also for me a message of encouragement to all of you. Don't just look at banks. Don't just look at insurance companies. I described the market already for what it is. It's a defensive market. It's never a market that innovates, never a market that moves proactively forward. Rarely so, at least not in their core products. In niches where it doesn't matter to their P&L, maybe they do it. But in other markets, the customer already is so empowered that the providers have to do much more. Hence the car example, which is clearly one where the customer has such an information advantage over the car manufacturers that you simply cannot survive in this industry without offering something uniquely successful at lowest cost possible. So you just have to bring your business to a completely different level of competitiveness. Not true for banking. Here you can actually be relatively mediocre in what you're actually doing and still make a great deal of money. That's why it's a fantastic business. I could name a few others, Amazon, Tesla. I don't just put them on there because they're great names and everybody thinks these are fantastic companies. I really like them because they do something which is different from what other players in the market have done. Amazon went from one product to capturing an entire universe of products to eventually capturing the entire customer interface. Beautiful. And we cannot and never will be able to compare ourselves with Amazon, but we started in mortgages, we moved into retirement products, we are now beginning to provide the customer more and more data-driven real estate-related services with the sole intention to literally offer and enhance our offering to customers beyond the pure product sell. And this is something that Amazon did remarkably well. It's also something that Tesla does remarkably well. They never position themselves as just being a seller of a car. It's not about the car. It's about the entire, well, it's data, it's a new type of technology wrapped in a car. And that's just a fantastic way to position yourself in a market that's already been controlled by so many others, especially in the car industry. Good. Last point, I don't want to forget this. I mean, obviously you need to believe in what you're doing. If you start something, you need to be passionate about it. And I think anything else just simply doesn't work. But I don't want to forget the support point. I briefly mentioned my wife, and I'm not just doing that just for personal reasons. I'm doing this because if you do something, you start from ground zero, you actually need somebody, you need a lot of people that help you. It can be personal, it should be personal people, it should also be business-related contacts, partners. You cannot succeed, I fundamentally believe that, just doing it your own. And therefore, it's so important that you have a network in place that stabilizes you, that grounds you, that actually always tells you also when you think you're just going way off the chart and expecting too much or wanting too much too soon, and literally give you that sort of health check that we all need as founders, because we tend to overshoot in so many things. And if I look at my first business cases at MoneyPark, I feel a little embarrassed because we are like years behind the first business cases. But at the same time, we have done, I think, pretty well. And this happens to loads of us, initially overestimating how easy it is, how quickly it will happen. And therefore, it's super important to have a network in place that helps you figure it out. Last 2 words about MoneyPark, and then I move on a little bit about Switzerland and how it is, how it was, and still is for me to do business here. An important element that I just put on this slide, very simply put, is how we actually get to market. So we are a technology business. We are a fintech in the true sense of the word, and at the same time, I still employ people. A lot of actually, 130 people now, meeting customers for a good part of them. So about 80%, no, it's not true, 60, 70% are advisors, the rest of it is IT, marketing, product people. But we still have branches in a country, in a business environment where everybody is only talking digital. I opened more branches last year than any other bank in Switzerland. We have 28 branches in the country now, and we are about to open a few more this year and next. So why on earth am I doing this? And believe me, I do get this question every single time from investors. Why are you still getting into bricks when you actually have the bytes to sell? I do this because I wanted to have MoneyPark not just as a niche offering for a small segment of the market. We sell mortgages online, and we sell mortgages through phone and video conferencing. But this doesn't appeal to the vast majority of new customers that are doing it for the very first time. So I wanted to be appealing as a business to the entire Switzerland, from the first financing to the last financing, from young to old and everything in between. So that's why I needed something to get in touch with customers. The other part of why I did it was simply because if you sell mortgages, you just happen to be in a situation where you interact with customers on a trust basis. It's not as bad as investments where they actually offer you money. I mean, at the end of the day, they get money, so you have a little bit easier entry point into the customer trust equation, but at the same time, they still know nothing about you. Nothing about your brand, nothing about who you employ, nothing about why you're actually in the market when all people know is Credit Suisse and UBS. So it is a huge helping hand for us to build trust and a market reputation. So that's why we did it, and that's why we're still doing it. But differently than any bank branch. So obviously, we cannot afford typically not ground floor levels. We are purely on meeting basis, and every single meeting is governed by our tech platform, which the customer sees 100% of it. So it's different, but it's still at the same time a man and machine business. Last point, for all of you still at the early stage of setting up a business, you need, obviously, as an entrepreneur, as a business, you need to build momentum. The sooner the better, the more the better. To build momentum, you need to be able to reach the customers and make sure that you actually win them as customers for your business. So technology is great, but there are very few cases where technology is a self-selling device. So typically, you still need somebody that does the job for you. So for us, the combination of man and machine is so important because we need to get to customers fast. We are in the retail and affluent space. We are in the transaction-driven business. The moment my people stop selling mortgages, my business dies right away. I have very few recurring revenues in the house. More and more so over time, but it's still a transaction business. So that's why I need to meet customers fast. I need to close them fast. I need to convince them fast. And all of this is still done very much so with the helps of specialists. This is our story to date, starting end of 2012, end of September 2012. As I said, no customers, no business. 2013, our first year, of business, where we actually placed over 100 million of mortgages into the market, which is good, a good start for us. And then you see where we are at right now. End of last year, we broke through the 1 billion per annum mark in placed mortgages. This year will be nicely overshooting 2 billion, which is not only out of our own means, but also did we acquire the largest competitor in the Swiss Romandy part, and thereby combined two businesses and are now also on a much healthier footing countrywide. And my next goal is 5 billion. And why is that a goal? And I didn't specifically put a year in it, but this is my next aspiration level. This is important to me because these are the numbers that UBS and Credit are making, and it's not just by wanting to be bigger than that. It has nothing to do with it. It's more about you need scale in order to negotiate. You need scale in order to actually have a chance to change this market. And I started MoneyPark not to sell mortgages. I started MoneyPark because I wanted to change this market and the way it's done. So that's why I need this scale, and I do everything I can to get to this level. Not by myself, of course, but nice now with 130 people. We sold 70% of MoneyPark at the end of last year for 153 million enterprise value. It's a very nice fintech transaction in Switzerland, but the story continues. So we are still all stakeholders, we are still involved in the business. We still keep pushing it because we want to and see that there's a lot more that still can be done. I already talked about the momentum, so I'll leave it to that, but I just want to encourage you guys to just, like, when you start your business, obviously you need to feel, yes, I mean, we're all hoping that there will be positive momentum, but there is a lot of it that can be done for it. So to define milestones that you can achieve, to make sure that there are KPIs defined that you look at that show positive traction, no matter what it is. In my case, it's volume. At the end of the day, it will also be revenues and bottom line and all that, but at the beginning, it's got to be something. So this is obviously something that is important for investors, is important for us to motivate our people, and also to get the personal gratification that we're spending our time well and at the right places. MoneyPark 1.0, getting into the market, just breaking into that extremely tight cartellage-like business in mortgages that we have in this country. MoneyPark 2.0, earning the right to play. We are now, thankfully, we are profitable, we are growing out of our own means, and this is, to me, the stage now where we actually turn it from, a startup into, hopefully, at some point, a well-oiled machine. It is far from that yet. It's still so many things that we need to do better, but this is one part of our story now. And we have now started MoneyPark 3.0, which to me is beginning to start, putting in the Amazon type element into the business. So we launched in cooperation with another startup, a machine learning based data service on real estate very recently. We're going to be pushing heavily into this direction to make sure that we have a certain story to tell to our customers before, during, and after the transaction. So you can imagine if you sell a mortgage, you're relevant for the customer when he needs you to finance your house. But the moment I sell a 10-year mortgage, I'm completely irrelevant to my customer for the next 8 years, when he can start thinking about refinancing it. It sucks if you won the customer at costs, obviously, from the market, and then letting him go again, having to let him go again because your product simply are not tying him in through anything, especially if you sell fixed mortgages. So hence, we need to think constantly about how do we create more value for the customer before he joins us, after he actually talked to us. To give you another anecdote, I lose 20% of my customers. 20% of my customers, after I already paid for them, in the meeting, they are perfectly financeable, they want to buy, they have the money to buy. I lose them because somebody else snaps away the house that they want to buy. And then they are back onto the market. And maybe for not to be re-seen for months to come. That's super annoying. So obviously, I cannot change anything about having more housing supply, but I can do a lot in trying to help the customer find a similar property faster, easier, and not by putting him back onto square one and having him to restart the entire journey, but by keeping him within the MoneyPark universe and allowing him to do this easier. This is all part of MoneyPark 3.0. Good. Enough about Money Park. I hope it was helpful in literally understanding what was important to me when starting the business. I want to share a few more thoughts on lessons learned, on mistakes I make, and I have made a lot of mistakes, us as a team, me personally, and I still do it, unfortunately. But I try to do things better in my latest business that I have started, but also in trying to talk to other investors, entrepreneurs, and here are some of the challenges I faced and some of the mistakes I made. So, number one, founding team. To me, crucial. Many of us start businesses not just purely out of a one-man show. It's boring, it's tough, it's more fun to do it as a team. I did it as well. I picked a co-founder who had money. I had an idea, he had money, so I thought it's a great combination. And it was for a good time. But then you run into difficulties, you run into conflicts. And I know very, very few startups who never had founder conflicts. It happens all the time. For a variety of reasons, irrespective of who's responsible, it doesn't matter. But to not have mechanisms in place to resolve conflicts, to have a governance in place that doesn't take care of such situations can be extremely painful. So I personally paid a high price for that, resolving some of these conflicts, and we did. So my co-founder left the business a long time ago, and we're still on very good terms, again, I should say. But there are conflicts arising out of founder situations that are not easy to handle, and it's very close to a marriage for many, many reasons. So divorcing it, maybe remarrying the same partner, different partner, it all has a lot to do with what we're doing. So take a look at it. I know it's boring. It's often legal stuff that you need to take care of, but do it while you still can. And when it's still sunny outside, the moment you have rain clouds on the horizon, it's getting incredibly hard. So I made this mistake. I learned a lot from many of the things. Funding, John already mentioned it. Switzerland is a place where there is many investors technically reachable. There's a lot of money. At the same time, it's not an easy market for fundraising, especially from external, out-of-country sources. It's also not an easy market to raise money from within the country. Switzerland, and not so much in the venture scene, which is now thankfully active and very healthy. It's an old money market. It's a preserving wealth market. Hence the whole private banking industry. So everybody is all about, I don't want to lose money. I don't want to risk money. So just I have money, make me more. So it's not easy to raise, and there are tons of mistakes that you can make when fundraising, like tons of it. And we made a lot of them. Just to give you one example, in my B round at Money Park, I accepted an investor, a Swiss media company. I should have never accepted the terms, never. I was tempted to do it because the package seemed right, and I did a mistake that many founders do, trusting in an investor offering you strategic value, operational value, but never having to live up to it. You pay the price by maybe awarding discounts on your share price, maybe finding a governance structure where you give away too much too early, and then you eventually get disappointed because nothing comes. So to all of you founders, I know investors are always likely to have, obviously, a tighter grip on you as startups, and then probably rightfully so, but at the same time, it should be a fair play. And I have seen and I've experienced situations where it wasn't fair play anymore. So it's tough, but at the same time, it's a learning curve, and I still love investor meetings. There's no better way to get feedback on your business early on at any stage of your business. So do them, learn from it, and make sure that hopefully some of the mistakes can be avoided. One point for us, for me, that's always critical is, and I mentioned my business case, my early business cases, founders are passionate, and it's a positive thing, but they're also a little bit naive, and that is also true, I guess, for me and for many others who start businesses. So we always think it's easier and it goes faster. And to me, it's founding a business, it's a bit like shopping with your wife. It always takes longer, it's more expensive than you think. So it's like, it really takes a lot to get the business case right, to make sure that it actually eventually delivers value. So your seed round, your seed follow-on rounds, your A round, it's good. Good storytelling, great team, early momentum gets you there. Between A and B is what I call the dev zone. So that's like beyond base camp. That's really where you need to start showing that your business can work. and where you need numbers that underline your business story and your business strategy. It's it's a fascinating episode and period of your business, but I just don't want you to be in that phase with too little means, too little funding, and too little time. So that's why you need to be careful about when you time your rounds, how much you take in, who you actually bring on board, and what expectations you create for yourself and others in order to get through at least this A to B round. Post B round, typically businesses tend to be at least somewhat stable and are delivering to a certain degree the momentum that you need to keep raising if need be, or to turn your business into a profitable one. But this is a path that you need to keep in mind. It's also, I found, extremely helpful to not only think of your immediate fundraise, but while you fundraise, you already have to think of the next round. You need to be sure what you want to achieve in between now and the next round. You need to make sure that your valuation track and that your milestone track is in shape and in good order. So that's why it's a balancing act, and it's not an easy one. Last but not least, timing is always a timing question when you start a business. Is the time right for it? Is it mature? Does the market receive it positively? When I left McKinsey, half of my partner colleagues told me, "You're nuts, you'll never make it." The other half said it can work, but we don't believe in it in Switzerland, or maybe it's going to take a while in Switzerland. I wasn't sure, to be honest. I really didn't know. I had very little evidence that the Swiss market would be receptive to what we are doing. I had early signal pointers, which I fully believed in. So the Swiss customers going more and more online, the Swiss customers shopping at Aldi and Lidl, who broke into this market, the Swiss customers pre- and post-financial crisis having 2.5 times more banking relationships. So going from a one bank relationship to a free bank relationship told me that they're waking up, they're beginning to realize maybe it's not good to have all the eggs in one basket and to literally buy everything out of the same source. So, but again, you don't know it, but you have to be obviously careful to try to realize it as soon as possible. I mentioned some of these points. One last point that I think often we as entrepreneurs, we tend to forget, especially in Switzerland, is customer acquisition costs. I have seen a lot of businesses, especially in fintech, robo-advisors to begin with, great stories, great headlines, but at the end of the day, if the product doesn't pay you enough to buy and spend money on customer acquisition, especially in B2C businesses like mine, it's extremely tough. So that's why obviously you need products that give you an economic value, customer lifetime value is big enough for you to allow for you to spend. And by spending, I mean big money. We spend millions in marketing only to get to a required number of leads to fuel our growth. This is initial spending that is out of your bank right away. The money we are collecting comes at best month later, at best. So you need to bridge the gap in between from a liquidity perspective, but you also need to make sure that the business case works from a pure customer acquisition cost and then collecting revenue perspective. My last 2 points, and then I leave you to your afternoon. My last 2 points are specifically geared towards Switzerland as a market. I love this place. It's my home now for the past 10 years, and I really, my main businesses are all here, so it's a fantastic country. It's not an easy place to start a business, and I know, all the associations, are always promoting Switzerland as one great startup hub. It is a difficult place. It has great advantages, fantastic universities, a fantastic governance and administrative system. I think the best in the world. But it's extremely tough from a people perspective. And by tough from a people perspective, I mean it has labor costs that are just crazy high. It has a certain DNA in the people, and young people even and already, that is geared towards the life part of the work-life balance, that is geared towards being tempted to go into the big corporates at salary levels that you will simply never be able to afford. And that sucks, right? You cannot afford to pay packages like the big ones. You cannot and do not want to afford packages to make people lazy and complacent too early on in their lives. You need them to be hungry. But at the same time, you need to be realistic, right? If you want to grow your business, you need people that come in that pick you over all the other options they have. And that's not an easy one to master. And I think on this perspective, Switzerland is not a great place for an entrepreneur. On the investor side, I already mentioned it. I think great investor base, not easy to get into. At the same time, there's plenty of money around, so it helps. You just need to do it in a way that the right investor at the right point of time is meeting you as an entrepreneur. From an external funding perspective, not easy given the market size, but just don't give up. I mean, we had external investors, and we had to always convince them that this market is bigger than what meets the eye, and it works eventually. Yeah, I think these are my most important points I wanted to leave on these 3 dimensions. You might notice there's one dimension missing, and this is something that I find extremely fascinating. The customer dimension I didn't put on here. And why? Because I believe the Swiss customer is simply no different than so many others in other countries. I was told the Swiss customer will never buy a mortgage outside the traditional bank. It's just not true, right? The Swiss customer is more online user than in most other countries. Like we have all of the big ones, Zalando, any of the big ones broke into this market and captured market share. I think the customer is completely there and open-minded. What is not there is often the supply. There is simply no provider. When I started it, there was no money park. There was nobody offering this to the customer, and thereby nobody testing the market. So sometimes it takes somebody to start it and then see how the customer responds to it. But I believe if you have a story, if you have a value-adding product, the Swiss customer is amazing. And it's also amazing in our case, just to give you one example, we are a retail and affluent provider of mortgages. We make our customer pay advice. No bank really believes that this is possible. And yet we do it for 2.5 years now. So he pays for the service that we provide. And why? Because we provide him a value add, a convenience, this shopping experience that I described. And this is amazing. So you can do something in this country that you cannot do. In Germany, people would be like, are you completely nuts wanting money from me for getting a mortgage from me? It wouldn't work. But in Switzerland, you can do these things because you can talk to the customer in a different manner, and he accepts it. So I think it's great. From a customer perspective, it's just very difficult from a few others. But absolutely no reason to discourage you. I'm here to also encourage you because you get feedback. And I think if you're an entrepreneur, this is why you're doing it. We measure every single client interaction. We collect feedback after every single client point, online, offline. And these are just some quotes, obviously biased quotes. I only picked the nice ones. I could have given you a few bad ones, but you do it because this is what fuels our energy as a team. And we want to make sure that the customer understands what we're doing. We want to make sure that he sees the value adds and the USPs I wanted to establish in the market. So this is why we're doing it, and this is what keeps us doing what we're doing. And last but not least, I want to tell you that just do it. If you believe in it and you have a right idea, just do it. I think there's nothing more beautiful and more rewarding than being an entrepreneur. So on that note, I leave you to the afternoon. Thank you very much. If you have any questions, please, anytime.
Before Stefan jumps off the stage, this is a really rare opportunity to ask questions of one of the truly successful Swiss fintech entrepreneurs. We'll take a moment if anybody does want to ask a question now. Don't be shy. Ralph.
I'm an investor, so I was interested in the valuation of the company. Could you just shortly explain how you did the valuation during the time?
The valuation from round?
Just the parameters you have taken, because your business model is not a copycat business model, so you can't take it from anywhere. So you had to fumble something together, or you had good metrics which were proven, so investor believed in it.
It's a difficult question, obviously, because I don't know whether there's one single right answer. I can tell you how I did it and how we did it. I mean, typically, when you start a business in the seed funding round, it's all angels from your personal network. It's family, friends, people that believe in you more than your business, because there's nothing to show for it. So at that time, you set a valuation that you feel is somewhat reasonable and justified, and you try to collect some money for it. So we had an initial close of about 5 million, 4.5, I think, as our seed funding position, and then I don't even remember how much we priced it at, but probably also around 5-6 million. Why? I don't think there's a good answer for that. I mean, obviously I showed the people the business case and said, this is going to go great, so please invest, but I had nothing to show. So I think at that stage, it's very much about you, your team, and having strong enough contacts and networks that show some belief in you. Then afterwards, it becomes a bit more professional. When I said, especially B round is for me one of these thresholds, one of these turning points where you need to show more. And we do comparables, so we look at competitors out of the country. There is no competitor in Switzerland that we could lean on for comparable stats. We used Meato in France, the largest by far and most successful intermediation platform for financial products. We used Interhyp in Germany. We used Money Supermarket in the UK, just to give investors an idea of what this could mean from a valuation perspective. Towards C round, we had company KPIs, growth rates, still very much volume-based, revenue-based. We were not profitable until the end of last year, so 2016 was our first year where we turned into a small profit. So you cannot value it fairly just based on bottom line. It's impossible. So you need some growth KPIs that back your story and that tell investors they should believe in what you're doing. When Helvetia bought 70% of MoneyPark last December, the valuation was obviously done through a number of things. At that time, it was also a few others trying to buy us 100% or to a certain degree. So there were a few competing bids on the table, and that helps you obviously in trying to optimize to a certain degree your valuation. At the same time, the story is one where you need, especially for us as a business, where you need to have a certain mid to long-term perspective. You don't change markets in 5 years, especially not the Swiss market. It takes a lot longer. So we wanted an investor that has a very long-term horizon, a very strong perspective on what we're doing, and was willing to justify that at a valuation level that we felt was great, but at the same time not completely out of mind, because we are still obviously we need to report. We are still wanting to grow the business. And we want to turn back our investors of any round a very healthy profit in a few years from now. So 153 last December was in multiple terms a lot. At the same time, the business, I think, if it keeps growing like it's growing, it's gonna turn into a business that's probably eventually worth something near the ballpark that some of our international competitors have achieved. 450 for Interhyp, Meato up in the 2 to 400s. So there's a lot of value that you can create in a market that is as big as the Swiss mortgage market. Not sure whether that answers your questions in all aspects, but I don't have a perfect formula that I could apply. But it's a good combination of KPIs and personal trust in people.
You just have to dive into this thing, entrepreneurship. Any last questions? One more. Yep, Mike.
Probably not a topic for an open audience, but no hard feelings. I mean, we respect each other a lot. As I said, we're still on very good terms, and we do businesses and investments together to a certain degree. What mistakes did I make? I focused very much on the business. I loved the idea. I was always driving it as the CEO, so I was extremely focused on the product, the business, the customer. I was less focused and a lot more trusting than I should have in looking backwards at the entire legal and governance aspects. And you can make a lot of mistakes. So the way your board is set up, the way veto rights are being awarded, the way majorities or certain topics that need majority votes, what kind of majority is necessary. I overlooked a lot of those topics, and no big harm done, because thankfully we're still around, and personally, it's been a fantastic achievement and an experience. But those are topics I did differently. I started my second business a year and a half ago here in Switzerland, a big data business, and I tried to avoid a lot of those mistakes by having a great lawyer taking care of things early on, rather than some home-cooked legal contracts defining a partnership that you just never get rid of anymore. So these sort of things, right? So I rather, even though it's expensive, I rather invest into some professional legal support, taking an objective perspective and trying to bring the founders together in all interest rather than having a very one-sided contractual setup, which I don't blame him for. I mean, I would have done the same thing had I been in his position, but it's just that's sort of the mix of things, right?
One last question, all the way in the back. Maybe wait for the microphone so we can hear.
Thanks. One of the biggest problems I see with Swiss startups is they think too small. They think about Switzerland and don't expand beyond. If you compare Switzerland to Sweden, they're very similar in terms of money, in terms of success. But Sweden puts out massive companies because they realize they need to expand almost immediately because it's a small market. Switzerland's also a small market. Why do not more Swiss companies not expand faster? Including you guys.
Very fair point. Moneypark is a business which has still ample of potential in Switzerland. So, you know, I do well over 2 billion this year. This is a good amount, but it's 2% market share of new mortgage volumes this year. 2% out of, or 2 billion, more or less, depending on how you count it, anything between 100 and 150, 160 billion a year. So that's one reason I have a lot of room to grow in Switzerland. The second reason, my go-to-market model is pretty cost-intensive. I have a mix between man and machine. I employ people. I open branches, as I mentioned. So, and I'm a regulated business. So I'm fully under the supervision of FINMA. I have the same compliances like any bank in the front part of my business. So if I were to go abroad, I would have to do everything again. New people, new market, new regulation, new investments. A lot has to do, I think, with your business model. On my second business, PriceHubble, PriceHubble is a business which is entirely B2B, entirely B2B2C, software as a service. Within 12 months, we are already operating in France and in Switzerland, and we are now going into 2, maybe 3 more geographies in the next 18 months. Completely different animal. Investor-wise, it creates a lot more momentum early on because it does exactly what you described. It will also face its challenges eventually, I'm sure, but there I can play the international cards completely differently, and I want to, because I believe in what you're saying. It's like, you know, I don't want to change just one market. Ideally, I would like to contribute to adding value in multiple markets. It's beautiful, but I think it depends on the business.
Yeah, I think to add to that, in finance, we have a bit of an odd case where Switzerland has such a huge demand for innovation in the financial services sector that you can often overlook global opportunities because there's huge opportunities right here. That's also why we see a lot of inbound interest from international companies coming to Switzerland to deliver their innovations and to grow here. But I think you're absolutely right. There's huge potential to see more companies looking at global opportunities and being more ambitious.
Maybe one very last point to your question. I just bought a competitor in the Romandie. 0 English, no German, nothing, all French. It cannot be more international expansion than that. It's like everything done again in a different language.
Roche de Grauben.
We have one branch in Ticino, we open another one, all Italian. Great, but it's already, within a small country, it's already 3 languages, so difficult enough.
Well, thank you, Stefan. That was really excellent. I'm going to stand up quickly and shake your hand. Thank you so much. Thank you, everybody. Oh, and small token of our appreciation here from Matt. Some quality Swiss wine.